The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 23rd. Geez, I forgot the date. The October 23rd, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes. Hope that everyone out there is off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a terrific Thursday. You know, we should always remember there are 4 rules for decision making. Rule number 1, all important or difficult decisions must be made on paper. That means if you're trading and investing, make all those decisions on paper, because I'd have to say those are difficult and important decisions. You see, if they could have been solved in your head, any problem that could have been solved in your head would have been solved by now. It wouldn't be a difficult decision. Number 2, be clear about what it is you really want and know your strong reasons why. Know your outcome and know your purpose is what I say. Number 3, remember that decisions are based upon probability. That's all it is. It's all about probability. Don't wait for absolute certainty out there. Absolute certainty never arrives at your door. Number 4, remember that decision making is nothing more than value clarification. And boy, do I value you being here with me each and every day. Now, maybe some of you have got some rules for decision-making, too, and I know that all of our tigers and tigresses would love to hear from you. So give me a call at 877-927-6648. Internationally, you can call me at 727-445-1044. Maybe it's not a rule. Maybe instead it's a question that you've got. And if you've got a question, then someone else has a question too. So don't call in for me. Don't call in for yourself, but instead call in for someone else. That's the way to live, folks. Random acts of kindness. It is Terrific Thursday. This is Tiger Financials Network. I'm Stefano Rhodes, and welcome to the show right now. We got the Dow up 231 points. She's trading out at 16,692. S&P up 24 points, traded at 1951. NASDAQ Composite up 61 points, trading at 44.44. Russell up 15 points, traded at 11.19. NASDAQ 100 up 57 points. New York Stock Exchange, you want to talk about market breadth out here. We're looking at a factor of 6+ to 1. Advancing issues, leading declining issues out there. That, folks, that is extremely strong market breadth out there. Yes, the bottom is in. A significant bottom in the S&P 500. You know, one of the tools that I've been working on with a group. In fact, I'm going to have them on for an interview. I'm trying to see if I can arrange that for next week out here. I'm going to take a look at the S&P 500. Now, originally I started trying to create a tool that our man Bud Rolfs had taught to us using primary trading ranges. I've changed the tool. It's not changed on my screen just yet, because really what I've done is, as I had all the data, as I could go back and take a look at the the lines on the chart. You see, prices are going to do one of really three things, right? They're moving up, they're moving down, or they're moving sideways. And prices move inside those horizontal and diagonal trading ranges out here. What I've got on my screen here right now is I've got the horizontal lines on my chart. Now, I've got the S&P 500. So we're going to go ahead and we're going to start with the monthly chart. Now, the cool thing is that this is an automated tool, and it works so well, and it's so easy, and it's so easy to use as a guideline to understand where price is going to likely run into resistance levels out here. So we're looking at a monthly chart. Hopefully you're following along with us on Tiger TV. If you're listening on your radio or mobile device at TFNN.mobi, we absolutely appreciate that. You can always catch the archive of this show on Channel 10. And, of course, you get the live stream by going to the homepage at TFNN.com. Upper right-hand side, you'll see a button. You can click on that. The show will stream live to you. Again, it's a monthly chart that we're looking at. 1971. Now, the two, let me explain to you what you're looking at here. The two big dashed lines on my screen, those are the largest areas of co-located opens and closes. That's where we have the largest number of opens and closes on our chart. Those become our primary horizontal trading ranges. The reason why this is different than what Bud's work is, because Bud just simply is taking over. He's carrying forward these lines onto a weekly, onto a daily, intraday time frames, and so forth. In my case, because I've got this automated, our lines are going to be different on a weekly than they are on a daily. And that's actually very helpful, depending on the time frames that you're trading, and understand where you've got other areas of natural resistance, horizontal resistance. That's what we're looking at as we speak right now. What we can see is the S&P right now is trading at 1950.08, by the way. Its next area of horizontal resistance inside of the monthly chart is this 1972 area. Price got slightly above it here the week of August, the month of August, I should say. In September, we saw a pullback right to the 1971-ish type level. Let me turn this out here on a data window, and I can give you it should change that, but the actual close was at 1972.29. What we saw here, what's interesting, if we take a look at the monthly chart, the little dotted lines that go across here, that's our midpoint. And the midpoint levels often act as a place of support. And I'm going through this for a number of different reasons. If you didn't catch the first hour, please go back and re-rack it. Just like, if you were at a pool hall, re-rack them. And because what I did was I went through a process of, after getting so many cards and letters, keep those cards and letters coming. Of course, they're always digital cards and letters, emails. And you're welcome to send me an email. I read them all. I read all the ones that get into my inbox. The ones that get in the junk box, they basically get junk, because literally, I don't know about you. I don't know if it's like this for you, but I literally get, look, in just the last about since we've been on the air, 13 minutes, I already have 24 emails that are sitting in my junk box, and about 13 looks like that are in the inbox. So the ones that get in the junk box, they I try to scan through them, but it is a quick scan through there. So if you are sending me an email and I haven't responded, keep resending, because I do like to respond to all of our listeners out there. But what I did during the first hour of the show is we went back and we took a look at the importance of these October lows out here. That it wasn't just by some strange miracle that for weeks Stevie was calling for a significant market bottom in October. There were other reasons in the mere fact that if you went back and you looked and you saw that we had other significant lows that each formed in the October. In fact, the one that occurred last year was almost exactly a year ago in October out here. Now, what's interesting about the Dow, or the S&P, we're looking at the S&P 500. When it made that low down in that 18, that 20-ish level out there, it was actually forming a Gartley buy pattern. So that's a beautiful thing. Number two, price was actually getting down to a midpoint of its horizontal trading ranges out there. That number was 1829.99. Remember, we use these as guidelines, not as exactness out here. There is no ruler that is exact, although sometimes these numbers hit exact. And when you take a look at the horizontal levels of resistance and support, what's so cool about this? And again, this is an automated tool. I'm using data. I'm using all the data in the S&P. Let me see. What do I have for my time template out here? I think my time template goes back to 1995. I think is what I'm using data going back to 1995 out here for daily, for weekly, for monthly. What's interesting here is the top that came in 2000. The top that came in 2000 stopped right at that midpoint level out here. The tops that came back in 2007, they stopped right at that 1547 level inside that midpoint area here. Once we were able to clear, price went up to the 1685-ish range. See how it got in there? It held. It kind of just moved sideways for a while up until the month of October in 2013. And now it's up at this next level. So if we see the S&P get above 1971, and I believe that we're going to see the highs get taken out here from September. So that 2019-26, those are highs that are going to get taken out. When they get taken out, what your expectation ought to be, if you're going to take a look at these horizontal, this is a monthly chart again that we're looking at, horizontal levels of resistance, 2112 is going to become your next intermediate stopping point for horizontal resistance. Once it gets beyond that, 2254 is next on its list. Now remember, the S&P 500 has traveled in a consolidation range that really takes us back to 1997. So between 1997 and 2013, it was traveling in a huge consolidation range, about, 600 points, something like that? 750 points, maybe at 750 points, and the actual completion of the measured move. You see, when you travel in a consolidation, your price projection is equal to or greater than the consolidation. Well, the equal to number takes you to 2350. Interestingly enough, when I take a look at a monthly chart, 2395 is more likely where price will go ahead and stop. In fact, on a longer term basis, the S&P tends to make significant highs more so at the midpoint level out here as we take a look at a monthly chart. Now, do I expect, and that could actually take place between now and Christmas. It'd be one heck of a move. But let's take things one step at a time. First, price has to get above the September highs. When it gets above the September highs, 2113 is going to be the next stop on our list out there. Now, that's on the monthly. Let's just simply go see, and you write those down on a pad of paper. Let's go see what the weekly time frames tell us. Now, what's going to first populate here are the monthly charts, are the monthly lines. I'm going to go ahead and turn those monthly lines off. Now, on the right-hand side where you see those numbers, if you're following along on Tiger TV, that tells me how many times we've seen an open or close really hit right in essence exactly at that range out there. So it helps me to understand just the level of support and resistance. But what I'm going to do is we're going to turn off the monthly since we're on a weekly chart. So I'm just simply going to turn that off. And what I'm going to do is I'm going to display the weekly numbers out here, and we're going to see what those have in store for us. And those are showing up as a lime green level. So interestingly enough, when we took a look at the monthly chart, we saw that price was stopping in that 2,000 range. Well, that's a significant level of resistance on a weekly chart as well. The number there is 2006.65. As soon as we clear that says from a weekly standpoint, we're on our way to the 2119 level. So it's a really cool tool out there. You guys are going to be able to have access to it, or anybody that's an eSignal subscriber is going to have access to this sometime in the not-too-distant future out here. Let's go take a look at, and you can use this and apply this to any chart and any time frame out here. If we take a look at the daily, I'm going to go take a look at the daily. I'm going to turn the weekly numbers off here. I'm going to turn the dailies on. The dailies are going to display in a blue format out here. And so if we take a look at where price is at in the daily while this thing here populates, I think on the daily I need to do this as well. And the solid lines are going to be those really significant bands of horizontal support or resistance. So this says the next level that we should find some significant resistance inside of the S&P is 1977. Once it gets above 1977, it's going to go ahead, it's going to take out its swing point high, which is September 19th, and then expect it to kind of stall a little bit at the 2032 level before it goes ahead and it completes its A to B equals C to the upside. I believe I gave you the A to B equals CD pattern inside of the S&P from the NQ. Let me just switch charts here because I don't have that. Well, I can add that tool. I can just insert that. I'll have to do it during the breakout here, but I will do that. We'll take a look at the A to B equals CD pattern inside the S&P 500, and that way, well, actually, we might be able to do it here real quickly. A point down here in February. B point September. C point out here says the 1-to-1 A to B equals CD 2102. We ought to see that by Christmas. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 233, S&P up 24, Composite up 64 points, Russell up 16. DAX is up. FTSE just went to went to flat out here, up 3 pennies. The Goldilocks getting smacked this morning, down $17. Silver, though, holding its own, down 9 pennies, trading at 17.13. We'll go take a look at the metals. Light sweet crude up this morning, trading up 93 pennies at 81.45. Let's go back before we were going into that breakout there. I was trying to put the A to B equals CD tool on the S&P chart. And speaking of A to B equals CD tools, for all of you eSignal subscribers, I'm doing a free workshop on next Wednesday at 4:30 p.m. And for all of you that are not eSignal subscribers, we've made it available to you to attend as well. It's free to attend. What you've got to do is, if you go over to the homepage at TFNN.com, underneath breaking news, you'll see it says free workshop by Steve Rhodes out there. That'll go ahead and take you to the sign-up page inside the eSignal platform. So if you're interested in really better understanding these A to B equals CD patterns that are out there, go ahead and sign up for that workshop. Now, what I will tell you, because of the extraordinary move off of the lows, the hammer candle, the V-shaped bottom, the October lows, everything that we've got out here, that the price projection, your 1-to-1 A to B equals CD to the upside inside of the S&P takes you to 2102. So what you should expect here, as we take a look at horizontal levels of resistance, 1977 looks like that's going to be our next stop here, where price is going to run into some agitation. Maybe at this gets to 1977. You're at 1951 right now, so another 20 points higher. Maybe that's going to be the spot where we start to see a little bit of a pullback. Maybe a pullback into next Tuesday or something, Monday or Tuesday, that then gives you an opportunity to get in on the long side for the rest of the holiday season out here. Then we're going to see a little bit of resistance around the 2007 level. That's right around that 2019 high. That's our B point of the A to B equals CD to the upside. And then we ought to see price move up to 2102. But quite frankly, if the move here continues as is, and it's a strong move, it's one of the strongest moves that we have actually seen in the S&P 500 since the March lows. That's how strong this move actually is. That says that we ought to see maybe more like 2178 or so when it's all said and done, a 1 to 1.272, A to B equals CD to the upside out here. That is what's going on inside our S&P 500. If we go take a look at some of the other things that are moving out here, let's go take a look at Goldilocks. She's off $17 right now. Gold trading out at $12.28, kind of cracking this $12.32 level by a few bucks. That's the point of control on a daily chart out here. This says that we could likely see gold maybe even pull back to $12.18. Now, gold here is in an uptrend. It is absolutely, in my opinion, it's in a uptrend. It's off of the bottom. What we're seeing here is a retracement. That retracement, if we take a look at where that could actually take us to as well, right now, all that gold has done is made the 0.382 retracement. So to keep things in perspective here, if this 1228 level holds, and I don't know that it will, but if 1228 holds, all that it's done is a dead cat bounce of 0.382 retracement from low to high. If this level fails, it says 1210 to 1218 would become the next area where you would begin to look for support. That's your 0.618 as well as your TAS market profile low. So we'll see if this 1228 level can hold inside of gold. If we go take a look at some of the gold equities out here, let's take a look at Rand Gold, GOLD. It's trading off a buck this morning, 175,000 shares. It's coming into this little sign of strength. It's going to test, it looks like, this sign of strength out here, that key reversal session from October the 8th, 1.5 million shares. So far, you're pulling back with 175,000 shares in 1 hour of trading, pulling back on light volume. Looks like at this stage, though, you'd have to say it wants to go test that 64.45 range out there, but it'll take its cue from gold. So if gold doesn't turn around here, if it's not turnaround Thursday for Goldilocks, expect Rand Gold to get down and test 64.45. That would be your next buying opportunity. If we take a look at Gold Corp, GG is the ticker symbol, off 27 cents, down with 1.3 million shares as we speak. Gold Corp, weaker than Rand Gold for sure, because it's already below its October 8th swing point out here, that key reversal session. Where is it that Gold Corp could head to? Excellent question. Let's go take a look at a weekly chart. Let's go see if there's a weekly swing point that this thing is gunning for out here. Gold Corp looks like it is gunning for the swing point from the week ended December the 16th with 50 million shares. This week you've done 20 million shares. The top of that swing is 21.94. Looks like that's where she's headed to. So far, the intra-session low is 21.97. So a few more pennies in order to be able to test that. A test of 21.94 and a rejection with a close above it with less than 50 million shares, which that's what's going to happen this week. That would be a rejection of a swing point with light volume. This is Steve Rhodes. This is TFNN. Dow's up 227, S&P 24. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 226, S&P is up 25, NASDAQ Composite up 65. Let's put a couple things together here for you so you can take a look at it. If you didn't catch the first hour, we were taking a look at a couple different charts out here. Let's take a look at the 120-minute time frame for the ES Mini. Now, as you take a look at this chart here, if you're watching us, you can see that the red diagonal lines from upper left to lower right, those are that's the descending price channel. And that's a descending price channel coming off of the high back on September the 19th out here. So it's a significant price channel. And what has taken place here thus far, we saw that level try to get cracked here yesterday, and it failed. We saw a little price relative strength divergent pattern that actually confirmed at about 2 o'clock yesterday afternoon on a 2-hour chart out there. Actually confirmed a little bit earlier on the 30-minute time frame. Now, There's a number of other things that are on this screen out here. So let me explain to you what it is that we're looking at. So number one, we've got a descending price channel, and price is clearly broken above that level. So it broke above it, came back, tested it. It's out of there. Number two, as we take a look at it, if we take a look at, for all of you peak and trough counters out there, and you should be, if we take a look at the counts off of the low that came in on October the 15th out here, inside the ES Mini, that was down at a price level of, what was that price level? 1813, right? So we go from that price level all the way up to the high that was actually put in here at about 2 o'clock in the morning. That was on October 22nd. You got up to that seventh wave. That's where you should see significant market turns out there. And in fact, we did see a market turn. We saw the market move down yesterday into the close out there. But what has taken place out here, you can see it. By the way, I've got my system set up here. It counts these peaks and troughs out there. It gets to G. I've got it set up here so I can let it go to one more count out here, a eighth count, so that I know that the seventh has been taken out. Because as we all know, there's nothing more bullish than a failed bearish pattern out here, and this would be a failed bearish pattern. So we now have a couple of potentially failed bearish patterns out here. You've got that price relative strength divergent pattern. It's a 2-hour chart. This time frame doesn't end until noon out here. It's only 10:36. So we got to see what happens between now and noon. But at this stage, you've broken out of a descending price channel. You've gotten up so that G count, there's no way that is an active count at this stage. If anything, right now, if we start trying to figure out what counts could it possibly be in, well, you could say that it could be in your fourth wave out there. That's a possibility. Or it could be in your second wave, so B or D out there. And at this stage here, the technicals aren't so strong and necessarily supporting the move on the 120-minute chart out there. So it says still to be cautious, Will Robinson. But coming back and testing this price channel and holding it, that would be extremely bullish out there. So it still says a little bit of caution, but very likely we're going to see is a price moving higher from here. Now, and price, by the way, it's not oversold. If you take a look at the relative strength indicator reading here, you're at 64.85. You're starting to get up there, but just simply 64.85 out there. So it's it's not oversold. So there's no reason right now for the market to actually have to pull back or anything along those lines. It can continue to chug ahead. Now here's the key, and I won't know till the end of the day out here, but we're going to take a look at the New York Stock Exchange. So I'm just going to take you from one chart to the next important chart out here. And in the case of the New York Stock Exchange, which is really, as you know, that's where I was getting my largest signal that the market was going to make a significant bottom. Well, number one, what I had going for me, did I say oversold? I meant overbought. If I said oversold, I'm saying one thing and doing, I don't know if you've ever done that. Have you ever thought one thing and said something else? Try doing live radio. I think I do it more often than I'm actually aware of. But thank you for catching me. Yes, overbought is exactly what I meant. Thank you, Joe D. in the Tiger's Den out here. And as we take a look at the New York Stock Exchange, so one of the bigger signals, one, knowing that the market typically bottoms in October. I know there's a lot of folks that talk about the crashes in October. But I guarantee if you go back and you take a look at the charts back to 1920, well, go back as far as you can, but go back to 1928, I'm fairly certain that you're going to find more bottoms in October than you are crashes in the month of October out there. So let's just go with what it is that we know, because this is nothing more than a game of probabilities, right? Probabilities, odds, using stops, things of that sort out here. Now, in the case of the New York Stock Exchange, if you were listening to the show, we went back 15 years, and we saw that once that price oscillator got below the zero line, that tells you that the bears are in control. Prices above it, the bulls are in control. Bulls are absolutely in control as we speak right now. But while price remained below that oscillator reading, what we saw was rising bottoms out there. And that was a signature. We only found 2 instances when that occurred where it was just a small bounce. My question to you is, coming off of the lows on October 15th, is this a small bounce? No, it's actually one of the strongest bounces, one of the strongest moves, because I'm not calling this a bounce. This is one of the strongest moves that we have seen. I can't call this a bounce until I see otherwise. And at this stage here, if the market finishes off at these levels, or a little bit higher. Now we take a look at what's going on in the price oscillator reading here above the zero line. Today you're at 215.26. A couple days ago you were at 210.84. If this thing starts to make higher highs out here, it is a indication of not just a strong move, not just a very strong move out here, but we're talking about the kind of initiation move that I've only seen on the charts 3 times since 1990 out there. And so now we're not there just yet, but we're there at the moment. I can tell you that much. We're there at the moment. But we've only been trading for an hour. We got 5 hours and 50 minutes left in the trading session. And so I recognize that anything can happen. I'm just simply pointing out something that I'm watching that is extremely obvious to me. If we see other price highs that were formed out here, just so we took a look at price lows, was when you had an oscillator reading when it was making lower highs out here. And that may not be what we have in store for us. That does. If we start to see lower highs, then I can come back and start to say, okay, maybe we have just a little bit of a rocky romance that's going on out here. But at this stage, if the market were to finish up at these levels, and I've only got another 19 minutes with you today, what I can tell you is if the New York Stock Exchange continues to trade around 10,517, 10,520, the wider swath of the marketplace is just giving you we're starting to get to a signal that it actually hasn't shown but just a few times in a long period of time out there. So really, really strong market. Have a question, looks like, to go take a look at the IBB out here. So let's go do that. Let's take a look at the IBB. That is the biotech ETF out here. As we take a look at this, it's trading out at 280, 260. Hey, super strong move inside the biotechs, even with a couple of them getting the you-know-what knocked out of them. I believe it was yesterday, one of the stronger ones. Which one? The name's off the top of my head. Oh, geez, Louise. Anyways, it'll come back to me, or somebody will remind me. One of the equities got just nailed yesterday. But if we do take a look at the IBB, the question was wondering if IBB reverses here. You mean reverses and moves down? Okay, BIB, yes, thank you. Biogen, yeah, just got hammered yesterday. If we take a look at the IBB, it's taking out the September 25th swing point. That's got 1.4 million shares, and you're up and above it today with volume. Now, we've been trading for an hour. 538,000 shares is the number at the swing point high. 1.4 million shares. Remember that dyslexia thing I talked about, or saying one thing, meaning one thing and saying something else? Yeah, it's a bad habit of mine. I don't do it too often, I don't think. So if we take a look at the IBB, if it closes today above 280.07, unless nobody buys any more shares, you're going to have a swing point taken out with volume out there. And so let me pull that back just a bit here. Yeah, that's setting up. We'll take a look at a weekly, too. So what would the daily A to B equals CD, the upside, look like? Well, first, there may be a couple of them out here. Let me see. The swing from July 3rd, now that was a shortened trading day, 612,000 shares. So we got to maybe, not double it necessarily, but let's see. When it was taken out with 1.1 million shares. So you've got, here's your first A to B equals CD pattern inside of the IBB. Let's see where that takes us to price-wise. That says that the IBB wants to make a run for 303.31 to 317. Now let's take a look at a smaller A to B equals CD. That smaller A to B equals CD, that's going to take us from the July 17th low to, we're going to go ahead and take it up to this high out here from September 25th and down to the low here on October the 15th. The 1-to-1 on that takes us up to the 37.71. But this move here off of the C point, it's called an explosion. It's an explosive move. There's no way that did I say 281? There's no way that 285.57 is going to be its next move. It more likely is going to move. So this is confirming 295.83. So today's move, unless the IBB pulls back here, if it stays above its swing point, then this is headed to the 301.31 level. You are at 280, 281 right now. And that is on the IBB Biotech ETF out here. But as long as we're inside these ETF structures, let's go take a look and see what's going on in some of the other sectors within inside the S&P 500. Let's go take a look at let's see, who's up big today? Yeah, gosh darn it. We'll talk about, the energy sector here. Now, the energy sector, the XLE, that's a strong move as well. So it's got a nice little... So here, in the weakest sector of the market, right, the XLE, you've got a really nice beginning of a nice little V-shaped recovery that's going on here. Prices run into resistance at the market profile high, 86.65. We haven't seen the XLE trade above a resistance level of its market profile since September 2nd. Quite a long time out there. So getting above that would be extremely bullish in what has been one of the weakest sectors. Now, inside of the XLE, where could this thing bounce to? Well, rising tide lifts all boats out here. If you come back to its June 23rd, that's the swing point high, really, going down to the low that came in here on October 15th. Oh, so naturally, if you go from the swing point high, how does that work, folks? If you go from the swing point high from June 23rd down to the low that was put in inside the XLE, the dead cat bounce or 0.382 retracement, this is not a dead cat bounce in the XLE, folks, okay? The dead cat bounce, though, the first level of retracement area, 0.382 is 86.68. And the actual high that you got to yesterday was 86.71, 3 pennies. How do you like that? So it's why you're at a little bit of a resting place. So you get above that 86.68 level. Next stop is 92.35. I'm not saying it's a one-way stop up there, but 92.35 becomes the next level out there, and that's what's going on inside the weakest sector, or the sector that got trashed the most inside of the S&P 500. And I don't know about you, but it's pretty darn strong. And actually, volume's been increasing each day a little bit on the way up here. You saw volume on October 20th with 26 million shares. Then we went to 31 million shares, and yesterday 36 million shares. Today you've done 7 million shares. Is there not volume coming into this marketplace or what? 7 million shares in the first hour and 15 minutes of trading? Yeah, exactly. So the non-believers are starting to become believers out here that this is a major, significant, major bottom that was formed last week out there. Hey, it is a new moon today. There is a solar eclipse. Maybe we get a little bit of a retracement, a little bit of a reprieve here for additional buys into the market out here. Let's go take a look at the, so that's up 2%. The energy sector. Let's look at the industrial sector, the XLI. Let's go see what that is doing. Well, there's a nice strong bottom that has been put in here. This thing is in bullish formation. Most certainly. This is going to head back to its swing point from June 9th. Let's take a look at the retracement from its June 9th. This went ahead and made an A to B equals CD down pattern out here. Let's take a look at its retracement level, see where she's at. She's at the 0.618 retracement as we speak right now. 53.15 is the number. You're at 53.21 out here. Yesterday, the only day of any kind of retracement. Intraday, it made a higher high, but it was the only pullback that we've seen. Super strong move out here. This is not the kind of move that you see in a little counter-trend rally out here. This is headed to 54.32. Maybe that's where it begins to find a bit of a resting place out there. Let's go take a look at the top-weighted sectors out here. Let's look at the XLV. Now, this sector really didn't get much of a hammering on the way down. It did get beaten down just a bit, but only got back to its August swing points out here. So it held up better than many of the other sectors. This thing's already into its swing point high. It's already into the September 24th trading session that has 8 million shares. You're into it today with 3.5 million shares in the first hour of trading out there. Does that sound like a market that wants to go lower? No, you're moving into a swing point with volume. The XLV, it's the third weighting structure inside of the S&P 500. So 65.27 is the number where this thing is headed to, so long as it closes inside 64.29. Maybe the XLV gives us really the first confirmation as it takes out its swing point high from September 24th that the market's going to go ahead and take out its September 19th highs and make that A to B equals CD to the upside. So that's what's going on inside the XLV. How about the XLK, numero uno, when we take a look at the weighting inside of the S&P 500? If we take a look at its retracement, nice strong move out here. Volume just slightly increasing each day on the way up there. It doesn't want to, it still wants people to think that the move is not, that the market's not going to make moves up to the highs out here. Don't let it fool you, folks. The XLK, next on its stop is 39.08. It ought to let off a few passengers as it gets to that level. And then 39.76. This is Steve Rhodes, TFNN, the director.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. A huge market breadth today, 6-to-1 ratio as we speak right now. Maybe we get a 7-to-1 out there, maybe even a 8-to-1 by the end of the day. The Dow's up 255, S&P up 27, NASDAQ composite. You got the Russell and the NASDAQ percentage-wise leading the charge. So in a real bull markets out here, it is the Russell and the NDX 100 that are going to lead the charge. They're the ones that are going to get into that kind of formation action out here. So keep an eye on that as well. So everything is pointing to a heck of a nice Santa Claus rally. That began early, October the 15th out there. It's not going to be a one-way shot, but the retracements at this stage are pretty far and few between out here. You got to really be quick on the finger. If we take a look at, what did I want to take? I had a request during the break. There was an email that came in from an Alice. And Alice wanted to know if I would be kind enough to show those horizontal trading ranges for the NDX 100. That's why I was talking about the NDX 100. So this is for you, Alice. I went ahead. I've got the daily. This is a daily chart that we've got on our screen right now. So you've got the NDX trading out at 4,014. Number one, it's headed to its swing point high. And when it gets out there, that's at the price level. Let me put that on the system here. My data window back up. That high that took place on September 19th is 41.13. So that is where it's headed to. You can see that at 41.24, you'll see a blue line, and basically there's a blue and a green line. So that's both a midpoint for a daily as well as a weekly horizontal trading range boundary line. So that's going to be the real resistance area. There's going to be a little bit of. There's going to be as your pilot out here. I'm going to put on the fasten seatbelts as we approach 4,046. So that's another 30 points north of where we're at. When we get up to 4,036, maybe that's the spot where we start to see a bit of some agitation. Let me see where the retracement takes us to. That's from the high on September 19th down to the low on October 15th. So the 0.786 retracement is 40.29. So between 40.29 and 40.46 is where you ought to find a bit of agitation out here. But, if you're long in this marketplace, just use stops. I would use kind of wide stops out here. Don't get jostled out necessarily of your positions, because this is going to be a long trek northward. It's only October the 23rd, and this rally is going to last until December 31st out there. December 31st, maybe it becomes a whole different story out here, but we're not even into the favorable seasonal cycle just yet. That doesn't take place for another week out here, but things look pretty good. If you look at the stock chart out here, it's not too often that a pattern like this fails that we are taking a look at. So a move higher is the likely outcome for quite some time to come. Oops, I didn't mean to do that. Let's see here. What do I have? And I guess in the last minute out here, if we take a look at the VIX index right now, it's still just trading right around the 50-day moving average. So 1599 is where it's trading here this morning. The actual 50-day exponential moving average is 1626. 1626, folks. 1626. If you see it close below that, then the fear index, that's not what I called. I just really called this the liquidity index. If you trade below it, the liquidity index out here says there's plenty of liquidity and all the reason for the market to move up. So New York Stock Exchange is just simply as strong as can be. As I say, as I was pointing out, as our man Z posted in the den for you folks. Right now you're at 221.86. A couple of days ago we were at 210.84 in the price oscillator. You finish up here at these levels, and we're going to see something that has only occurred 3 times since 1990. And all of those times were major bottoms in the marketplace. Hey, this is Steve Rhodes. This is TFNN. Have a great Thursday, folks. I look forward to seeing you tomorrow. Remember, use stops, because anything can happen in the next 2 minutes. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.